Hello, everyone. For the longest time, I thought smart money, by smart money, I mean the big banks, the prop desk traders, the hedge funds, they probably are using some kind of ultra sophisticated PhD level black box model to make money, right? I'm sure some of them do because we've seen this, right? They've got huge quant teams, an army of analysts, and algorithms that they claim that could give NASA a run for its money. But here's the twist. When I got to know a few folks who actually worked at these prop desks, senior analysts who sat at the war rooms of India's top institutions, what they actually told me blew my mind. They weren't always doing something hyper complex. In fact, a lot of the money they made came from doing very simple things, but things they do really, really well, right? And today, I want to share one of those strategies with you. This is something that I call pre-results trading strategy. It's very simple, it's repeatable, and it's surprisingly effective if you do it right, right? So I'll be doing a multi-part series on this topic, and in each episode, I will cover one of the smart money secret strategies. And in this first episode of the smart money secret series, let's dive into the pre-results trading strategy. So let's get started.
If this is your first time here, welcome. My name is Vivek, and I'm a financially independent algo trader. This channel is all about building a community of algo traders. We discuss everything about algo trading using Python, building and backtesting trading strategies, market updates, and much more. Please do visit our community website, FabTrader.in. Also, do check out my other YouTube channel, FabWealth, where I talk about my own financial independence journey and share tools, methods, and strategies that help me achieve my financial freedom. Thank you.
As usual, the details that I'm going to be talking through is part of the blog article that I've already written. So you can access this blog on our community website, FabTrader.in. And if you go into stories, you would find this blog. Before we begin, let me set some background. I'm sure you agree there's always been a big gap between the smart money people and the small retail traders like you and me. The big banks and the smart money folks have three unfair advantages as far as I'm concerned. One is they have this massive network across the country, so they get to know information even before it hits the newsstand. Second thing is they have deep access to forward-looking information using the network that I just mentioned. They get to know information like future expansions of the company and the other plans that the companies have. Typically, these are information that are not readily available to the retail traders ahead of time. Right? And the third advantage is the army of analysts who keep crunching data around the clock. Right? That's one of the biggest strengths as well. So let's face it, we can't compete on scale with them. But I got lucky. I happened to meet a few people who worked inside two of the prop desks in the country. And then these institutions are pretty big and they really move serious capital. To be fair and to keep my friend's identity, private, I'm not going to be naming them. So what happened is after I met them in a convention where they had approached me personally on some work relating to the algo trading, over the years we became very good friends and we often discuss markets, and that is when I picked up some nuggets of wisdoms from them. And it is during this time that I learned this strategy. It's called the pre-result strategy. And the best part is you and I, even as retail traders, can use it without needing any special tools or insider access. You see, these institutions usually start building positions before the results are announced. They don't wait for the headlines; they act before the crowd, right? So here's how we can also follow their breadcrumbs, right? All you don't need really a lot of things. All you need is just curiosity, consistency, and a willingness to follow some simple steps that I'm going to explain right now. So let's see how this strategy exactly works. As usual, I want to point out that this is not an investment or a financial advice. This is done purely for educational purposes. And as it is, it's very highly risky to just start using this strategy in real world without proper research or backtesting from your side. So again, this is meant for educational purposes only and not an investment advice. Let's now jump into the actual strategy itself. The strategy is pretty straightforward. It only has just 5 straightforward steps in it. Step number 1 is that you start tracking the upcoming results, right? So 10 days in advance, 10 to 15 days in advance. So if you ask me how to do it, there are a number of ways you can actually get the upcoming results, quarterly results from corporate. So one of them is to go to the NSE or the BSE websites. There's a separate page called the corporate announcements. I'd already done a video on this one where I built a Python screener, which will fetch all the upcoming corporate announcements and then give you that list. So I'll put a link to that particular video. And if you want, you can automate this particular process where you can scan automatically, announcements that are due for the next 10, 15 days and have it maybe send an email or send it to your Telegram channel so that you can automate this particular process. For people who don't want to automate it, want to do it manually, there are a number of websites that offer the same information. You can manually check them from time to time. One of the websites that I like personally is Sensible because the data is very clearly laid out there. So you can use one of those resources available online. I have a general appeal to make. Close to 80% of the people who watch my videos don't seem to be subscribing. As you're aware, this community is just one-person initiative dedicated to help people on their fire and wealth-building journey. Running and maintaining this community takes time, effort, and resources from my side. One way you could support this community is by subscribing, liking, and also sharing this content with your friends. This will motivate me to do more such videos and keep this community alive. Thank you. The second and the most crucial part of the process is like once you have the list of companies that are going to be announcing their results in the next 10 to 15 days, now it's time to find out what the overall market mood is and what the news around it. The way you can actually do it is, usually people go into websites and search for it. It's not a very reliable source as far as I'm concerned, and that's what I've been told also by the prop desk guys. What my friends told me is that the news websites are not reliable because some of those articles are planted intentionally to misguide. So the things that I've been told and I usually follow are these three YouTube channels. You could also look at other ones, but these are the ones that I used to use. So what you're looking for is that search for the companies in question here and find out what exactly they are talking about. The key things that you need to look for is just the positive sentiments that comes out of the video. It has to be majority sentiment, has to be positive. That's very, very important. How you can find out is they typically use words like expected to beat estimates, strong revenue growth, and all that. So you need to get that vibe that it is majoritarily positive. And even if you get a say some sort of a mixed or a negative thing, then that particular stock is not for you. You just have to skip that trade. And the third step, which is also very, very crucial, this is one thing that these the big bank guys look for, is that they want to actually see a big correction in the price, 10 days, 15 days prior to the announcements being made, because these guys look for a healthy dip before they invest anything. That's what sets us apart, right? I mean, typically these guys want the lake to dry up so that they can go in and fish, swoop the entire fish in. Whereas retail traders, we look for a lake that is brimming with water, and then we go and sit with our fishing rods and try to fish one or two fishes out of the big pond. That's not how they operate. They want the price to go down. They want a healthy correction to happen before they start investing. So all you need to do is just 10, 15 days prior to the announcement is made, you've made sure that the overall sentiment is very positive in the market. And number three is that the third most important non-negotiable item is that you have to see a healthy correction happening in that stock, and only if these two conditions are met, then this particular candidate becomes ready for trade. With all the necessary conditions in place, typically we go buy 10 days prior to the results date, and then hold on to that position. In terms of when to exit, you typically exit, for example, if the announcement is happening tomorrow, you exit by end of day today. That's how it happens. Or if you want to hold it for a little bit longer, mostly the announcements are made post lunch, so you can actually hold it until noon next day. But I would suggest that one day prior is probably the best way to get out. If you haven't joined our Telegram group, please do so. I share market insights, algo trading tips, and new video notifications, and this way you can stay up to date with our community news and events. The strategy rules feels a bit confusing. Don't worry, I'll explain it on a live chart. This is Solex Energy. This red line here is where the earnings announcement date is. And then 10 to 15 days prior, we typically start our journey. We look for two specific conditions. One is you check, the YouTube channels that I just talked about, find out what the overall sentiment is, and if the sentiment is positive, that's first criteria checked. The second criteria that you need to look at is, there needs to be a proper correction happening prior to this. In this case, the price correction has already happened close to about 30-35%, which is really good. So with both the conditions set, we make our entry during the 10 days prior to the earnings announcement is made. And then you see this rally happening. And, we typically get out on the day prior to the announcement at this point in time. And then as you can see on the announcement day, the price starts falling. Right. So this is the result day, and this is where the reversal happens. Right. So this is the alpha that we're trying to catch, and in this case, I believe it is about close to 35% rally. And if you ask me what is the psychology behind it, is typically the retailers, they look at the results, and they look at the rally, and this is where most of the retail traders enter, and this is what happens to them, right? Whereas the smart money already is, they basically play on anticipation. They entered at the right time, and they made full use of this. And what the retail traders are only doing is providing liquidity for the smart money to get out, right? They're all buying, and then the retail, the smart money is all trying to dump the shares, and the retail traders, most of them, they buy and provide liquidity for them to get out. So that's why it's usually said that the smart money sells the news, and retail traders kind of buy the hype here, and typically that's what happens to most of us, right? So what some of the questions that might come up is, what if the stock continues to trend and go up, right? It might, but we try and avoid that because in most cases, the 90% of the time, this is what happens. In a few cases, for example, if you've observed Bajaj Finance recently, when the whole market was a bear market, Bajaj Finance alone was the lone stock that kept on going. And even if you look at their announcement date, even post announcement, the stock started rallying much further. But the exceptions don't become rule. This is the rule. That is, you try and get out the day before the announcement is made. That increases your chances of winning. Similarly, there are a lot of profitable strategies post results as well. I will try and cover them in the future videos. If there is enough interest for this video, there's enough engagement, then I'll probably do those videos as well. At least there are about 2 or 3 different variations of this strategy where you can do some trades post results as well, which is very profitable equally. So I'll cover them in the future. There are a couple of things that you should avoid as well. Do not use this strategy on the public sector undertaking stocks. There are a number of them. Although they post good results, it's highly risky to trade on those ones because, as you know these are controlled by regulatory changes and announcements from government. So things change very drastically whenever a policy announcement is made. So trading on these ones, 10 days prior to the announcement is always very risky. Similarly, the second category of stocks that you need to avoid is ones linked with the commodity. While individual companies can do well, and then one global announcement or news could really derail all your profits. So you need to stay away from commodity linked stocks as well. Let me just recap what I just covered here. Three key things, right? Number one, while retail traders react to the headlines, smart money is already halfway to the next trade, right? Number two, the edge isn't in chasing news items, right? It's basically anticipating it, right? Number three, it's an understanding expectations, watching for accumulation, and exiting before the hype really sets into the market, right? So those three things are what you need to take away from this video. At least that's what I learned from my prop desk friend. And honestly, I'm grateful that he shared this particular secret with me because it completely shifted how I look at results season. This is just one of the smart money strategies. I plan to cover the rest of the ones in the series. If you found value in this one and want to learn more ways to trade alongside institutions and not behind them, then definitely please hit your like button, subscribe, and also stay tuned for the next one. Until then, keep it simple, stay curious, and remember, smart money doesn't always move fast. It just moves early. Thank you. If you genuinely found this video useful, please consider subscribing and liking the video. And I will see you soon in another video. And until then, take care and happy trading.